Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 11th of November 2019, so welcome everyone. Welcome to this Monday's afternoon session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimers. The content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, also just a quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we update on a daily basis, and I believe you can find a lot of useful stuff here for yourselves, guys. So feel free to visit us, feel free to check out our website in general, jfdbank.com, and as I said, we do provide various services, so I think you can find something specifically for yourself. Okay, but for now, let's jump into the charts. Now, the first one I want to touch on here is the FTSE 100. Now, I talked about the FTSE this morning, and I was telling you guys to keep a close eye on this upside support line. And basically, this is what happened. We've managed to get our break here. So, in a way, initially, the idea was that if this upside line holds, we could see a nice rebound here and maybe a push back to the upside. But as you can see, the FTSE kind of started breaking this upside line, started breaking the 200 EMA on the 4-hour chart, but didn't quite get to our comfort level, let's say, where we would like to consider, where we could get a little bit more comfortable with further declines. And this level was around the 7,250, 52 zone, roughly around there. And the index did drift lower, but is now correcting back up. It's still below the 200 EMA on the 4-hour chart. Now, how you could look at it is if we see a daily close today below this upside line. This is a 4-hour chart, by the way, but if we see a daily close below this upside line, then in a way it increases the chances of a further move lower. But again, I'll repeat myself, in order to get comfortable with further declines, a drop below the 7,250 zone would be needed. If by any chance this somehow travels back above this upside line and closes above this upside line, then of course we will keep an eye on this one. We will consider a possible move higher, but in order for us to start looking at higher levels, again, a push above the 7,350-51 zone would be required, but until then it would be for us a bit of a kind of, I would say, somewhat of a neutral zone here. So that's why, guys, for now all eyes are on today's close. And let's see how this is going to play out. But for now, it seems that not all is good here in the bull block. But in order to get comfortable with the downside, a drop below the 7,250 zone would be needed. Dow Jones Industrial Average. I haven't looked at this one for quite a while. And basically, after the index managed to create a new all-time high near the 27,774 zone, roughly around there, 74, 75. Excuse me, it kind of retraced back down, and looking at the cash index right now, it is trading around the 27,550 zone, maybe just slightly above that, but basically near this level right here. Now, let me just put this one on the chart, and that's the high of the 5th of November, and that's roughly around the 27,560 zone. So this is where the cash index is currently right now. Again, all this is still kind of somewhat positive because we are still above this upside support line taken from the low of the 3rd of October. And at the same time, we are above this downside resistance line that got broken Now, it's also a bit of a tentative one, and this downside resistance line is running from the high of the 16th of July. But in a way, if we start seeing a break below this upside line, then we will consider a possible move lower. The only thing is that, well, we are taking a very conservative approach here in terms of the downside, because to be honest, ideally we would like to see a drop below this downside line, and then we will get comfortable with lower areas. I do understand that we could be missing out here on a bit of a move here, but to be honest, as long as it remains above this upside line, it still has got a chance to drift back to the upside. If it starts breaking this upside line, then this is going to be our little neutral territory. But if it starts dropping below this downside resistance line, then well, this is where more bears could start getting excited. In terms of the in terms of, let's say, if this suddenly reverses back to the upside straight away, and it doesn't, let's say, travel to the upside to test this upside support line, in a way, keep your eyes on this all-time high near the 27,775, because in a way we're also going to take a very conservative approach with the upside, because we've just recently, or just say, should I say, just last week we've hit the all-time high. So in a way, this market is slightly overbought on the shorter time frame. So this is what we're seeing right now. It could be classed as a bit of a correction before another leg of buying, but then again, let's not rush into this. Let's, for now, keep an eye on some of these key levels. So if this index, let's say for example today, continues to trade below the 27,560 zone, in a way this could lead to a further correction to the downside, where we could then aim for the 27,400 zone, or should I say the previous high here that we saw here on July, or should I say the highest point of July. There we go, finally managed to say it. So keep your eyes on this one, guys. Again, if it continues to trade below the 27,560 zone, there is a chance we could see a drift lower, a test of this upside line, or this 27,400 zone, and then we'll take it from there, guys. We'll see what he wants to do after, but at the moment, it's quite interesting on this index. Gold. I've looked at gold this morning as well, and basically what I was talking about for you guys to keep an eye on on this downside resistance line taken from the high of the 4th of October, and you can see that gold did try to make its way higher, but kind of failed to test this upside line. It kind of got back closer to this key area of support that I talked about previously, the 1459 zone. And as you can see now, it's going to be very interesting if it breaks this or not. So if it does, then we could target this 1453 area. I do understand it's only about 6 points away here, but this level here, the 1453, acted as a fantastic area of resistance, first on the 18th of July, and then as a nice area of support back on the 5th of August. So should I correct myself a little bit? Maybe the nice intraday swing low here. So yep, guys, this is the level that we're going to be targeting. If it gets a break here, then yep, further declines are possible. We could be then aiming for the 1433 area around there, but probably not today. Today the main focus is going to be on this territory right here, the 1459. If we get a drop below this, then yep, we will consider a possible move towards the 1453. We're not going to drag this one too much to the downside. This level, by the way, also coincides with today's S1, so could be an interesting level here for gold to reach. Now then, CAD yen. Something that you probably don't look at very often, but I've talked about this one recently. I talked about this one basically this morning and last week, and I was telling you guys to keep a close eye on this one, because it might present itself with a nice opportunity here for the downside. But initially what we needed, and this is what I was saying, that not only that we need to see a break of this upside support line, but also we would like to see a drop below the 82.31 zone, and this way the pair would or should I say could travel lower here towards the 81.85 or the 81.74 zone, and this area right here could be a nice potential area for support. So for now, keep your eyes on this level, keep your eyes on the 200 EMA as well, just in case if it decides to stall around here somewhere. But the main focus here is right now on this 82.3130 area, roughly around there, guys. So keep your eyes on this one. If this suddenly pushes back above this upside line and pushes above the 82.77 zone, this is where we will start considering higher levels. But ideally, for us to get comfortable with the upside, a push above the 83.11 area, which is the high of the 7th of November, would be needed. So, or in other words, the highest point of last week. So, yep, guys, for now, in terms of the upside, it could be slightly off the table, but in terms of the downside, there we are waiting for that break. USDCHF. So, I talked about this one this morning, and basically what I was saying, guys, that it is quite interesting right now, and in order for us to kind of consider further moves higher, we needed to see a push above the 0.9975 zone. As you can see, the US dollar today took a hit, so of course the equity market started declining, or should I say the futures market, the cash indices started declining, and basically the risk, the buying of the risk currencies started kind of increasing. So currencies like Japanese yen and the Swiss franc. So these kind of attracted attention today, and you can see here by the USDCHF that that this is what happened exactly. So USDCHF drifted lower, but once again it tested this downside resistance line. Now this is what I was talking about as well, because if this downside line continues to hold and it continues to act as a fantastic trampoline here for the for this pair, then we could see another push higher. The only thing is, for us to get comfortable with the upside, we still need this push around here above the 0.9975. So for now we're not getting that, so we're going to remain neutral. But in order to examine the downside, or at least downside in the short run, ideally a drop below the 0.9909 level would be needed, because this way the pair would drift below this downside resistance line. It would drift below all of its EMAs here, and then could, if we see the fall of below this key area of support here, which acted as which held the rate from moving lower around the 6th of November, and then we will consider further decline. So this is where we will get a little bit more comfortable with the downside. So in a way, let me just quickly mark this one for our future reference. And so this is what we're going to be aiming for, the downside. GBP Aussie. So last week I was talking about this pair for throughout the whole week, and I was telling you guys to keep a close eye on this potential falling wedge formations, which tends to break, which according to textbooks, of course, tend to break to the upside. So we did get a break of the upper side here of the wedge, of the falling wedge, and we got our confirmation break here above the 1.8736 zone. I talked about this one a lot last week, and basically, so now you can see that the pair is finding some resistance near the R2, today's R2, which is roughly around the 1.8780 zone. In a way, even if it decides to drift back down here, as long as it remains above the 1.8736, we will continue targeting the upside here. And in terms of the upside, for us, we're not going to drag this one all the way here towards the highest point of October yet. We want to see how it's going to perform around the 1.8857 zone and the 1.8942 area here. The last one is the high of the 18th of October. So for now, we're going to target only these two levels. Again, if we see a retracement a little bit lower here, as long as it remains above the 1.8736, 35 zone, yes, we will continue targeting the upside. But if it starts falling below this, then this is going to be our little neutral territory, because still for us, in order to, let's say, get comfortable with the downside, a drop below the 1.85 level is needed, or even we could actually lift this a little bit, just from which we could start looking at lower levels, and that would be the 1.8543 zone, roughly around here. This is where the pair found support last week. And if we get a drop below this, then yes, we will aim for the 1.85. But if that fails to withhold, then yep, this is where more bears could get excited and they could drive the pair lower. That said, again, let's not forget about this upside support line, which is taken from the low of the 29th of July. Let me just double check this very quickly. So 30th of July. There we go. So if we get a slide here, then the downside could be limited due to this upside, this medium-term upside support line. But again, from the very short-term perspective right now, there is a possibility for this one to continue pushing higher. Euro USD. Oh, and by the way, with the GBP unless there is a negative headline coming out regarding Brexit issues. So that's how you need to trade the pound nowadays. If the data comes out good, then we could see a push in the pound, but again, it could be quickly kind of overshadowed by the Brexit news. So yep, keep your eyes on those as well, guys. And Euro USD, the last one for this session. This is working out perfectly. So this is what I was talking about this morning. Basically, we were looking at this little downside resistance line taken from the high of the 4th of November, and this is what I was saying, that even if we see a push higher, keep your eyes on this downside line, because if it holds, if it keeps the rate down, then there is a possibility we could see the Euro USD drifting back to the downside, or even dropping below the lows of last week, and then yep, we will consider lower areas here. For now, yes, one part of the kind of condition is being met right now, the hold up near this downside line. So the downside line is keeping the rate lower. But now, how you could play this one out in order to be on the safe side, just probably keep your eyes on this one, stay neutral somewhere around here, and wait for a drop below the lows of last week near the 1.1016, roughly around there. If we get a drop below this, this would confirm a forthcoming lower low, and we could target then, of course, the psychological 110 zone, or just slightly below that, we do have the 1.0989 level. So good level to watch. We're not going to drag this one too much to the downside yet. We're just going to continue moving on this one step by step, because again, everything can change very quickly. So for now, this is going to be our target. If we get the 1.0989, if we get a drop below the lows of last week near the 1.1016. So let's keep an eye on that one. In terms of the upside, we need to see a break of this downside line and a push above the 1.1063 level before we could examine higher levels, and just for extra confirmation, a push above the 1.1093 level, roughly around here, which is marked by the high of the 6th of November. This is what we would need in order to get comfortable with further upside here, and we could then aim for these higher levels that we saw in the beginning of November, near the 1.1175, 76 zone, roughly around there. But again, for now, it seems that the upside could be slightly off the table, as long as this remains below, as long as this pair remains below this downside resistance line. So keep your eyes on this one. Okay, guys, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me tomorrow morning, as always, at my Traders Espresso, that's 7 o'clock GMT time. But for now, I hope you have a wonderful trading day, guys. Stay safe, have your stop losses in place, and don't overtrade. And I'll see you tomorrow. Thank you very much, and bye-bye.